Hey everybody, welcome back to Ryan Makes Sense. Today we are looking at Chegg, ticker symbol CHGG. My English is off, I guess. What I want to know is does this stock deserve to be around $6.80? Are hedge funds and institutions buying? Are they profitable? What does their debt situation look like? What does their cash situation look like? All of that. So, without further ado, let's go ahead and look at the bigger picture and go from there. Maybe. Okay. So, this one had an amazing rise from $4 to 112, back down to $6. Holy cow. Looking at the RSI, it's literally been flat for about the last 2 years. Momentum actually kind of looks like it's ready to move upwards. Money flow is curling up right here. Relative momentum is scraping the bottom of the barrel. Not much momentum at the moment. Looking at this chart, we can see three fallen soldiers, which is three red candles. One, two, three. And April is the fourth one. Will we end up green this month? We don't know. So I mean, based off of this, it's kind of mixed. I need to look at the financial picture and then maybe we can come back and see. Um, Sales have definitely plateaued and are coming back down. Earnings per share is going the wrong way. Shares outstanding, this is good. It means that there's natural and organic share accumulation. Look at these price targets. Excuse me. Okay, so we're gonna run my calculation here. They make $18 million and 180,000 in income, so they are profitable. They do 716,290,000 in sales. That's great. We're gonna look at the cash and the debt, the balance sheet. Let's look at the quarterly. And this is USD. All right. And we're going to go here and we're going to add plus 330 million, 10,000. I'm sorry. Yeah, 330,000, 330 million, 10. Yes, 01000. There. 330 million, 10,000. Okay, sorry. And they have total debt. They have long-term debt, not that much, of 260,820,000. Okay. So total assets is 1.7 billion. Total liability is 782 million. So about a almost a $1 billion buffer. Um, Assets dwarf liabilities more than 2 to 1. Not bad. We can see the CFO and the chief operating officer are selling. Granted, it's not a lot of shares. The CFO kind of sold a lot of shares at $10. Okay, let's go back up and take this and divide it by 98,770,000. So this is an $8.13 stock trading at $6.83. So there is a nice little apex there. That's about $2, $1.30 appreciation possibility. That's about 20%, I think. Not bad. We are right back down to 2016 levels. So what are institutions and hedge funds doing before we look? It shows they own 97% of stock. That's old data. New data says 109%. That's huge. That's 12% increase. You can see a nice little jump right here in ownership. Vanguard and BlackRock, they do own. BlackRock decreased. DE Shaw purchased 5 million shares recently. Celebra Capital purchased 9 million shares. Vanguard decreased about 500,000 shares, and Bailey Gifford decreased about 6 million shares. Interesting. I don't feel super optimistic or super bearish on this one. Let's see what we can find on the daily chart. I think overall, in the bigger picture, buying this at $6 is not bad. It is under 100 million shares float, so it could be pretty quick of a move if there's a big move up or down. Gross margin is 73%. That's amazing. Earnings per share past 5 years down 20%. Sales about 20%. Take it or leave it. I'm not feeling too jazzed about this one. Yeah, the stock really is having a hard time staying above any of the moving averages. And I don't really see any patterns that stick out. Like, I don't see a cup and handle. I don't really see head and shoulders. I mean, kinda, but yeah, I'm not seeing anything super negative or super positive here, which is kind of interesting. We're gonna bust out the I probably charted this one in the past. I'm crossing my fingers I have. Maybe not. I have a catalog with thousands of stocks. Okay, I've lazy charted this one before, it looks like. Okay, so we're gonna do a couple things here. Fib arcs, and I'm thinking I'm trying to find the where we could possibly see a potential like really good respect of the Fibonacci lines here because they usually line up really well. 315. So what I mean is like this outer ring, like look how well these candles respect this outer ring. Like right here, you can see support, support, beautiful support right on the money. Look, resistance, support, 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 support. Like, and then you have resistance, 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 support, resistance. So you can tell this is this Fibonacci arc is well respected by the candles to the upside. Now I want to find it to the downside. And I don't know if we're there yet. So I'm going to do a couple more things. Okay, so what I just did here, every time we've hit a low in a trough, the next trough was a high. So we have our low, high, low, high for 2030. And the 2030 all-time high, or not all-time high, but the 2030 high does align with George Trich's Periods of When to Make Money. That's my best highly viewed video, where we do see a market melt up similar to the dot-com bubble, the COVID lockdown, going back. So watch that video if you haven't. I think we do have some more time for this to hit another low trough like we saw here. So low, high, low, high. So this is interesting going into earnings. I'm going to say just personally as myself, I'm staying on the sidelines. I think we can wait this one out, in my opinion. and I'm going to stick with it. I don't really see a reason to buy this. They are profitable, but their sales have plateaued and their EPS is going the wrong way. I want to see this over the next 6 years. I want to see this shares float get down to 10 million. I want to see their sales reverse. I want to see maybe a new C-suite. Let's get some new leaders in there. I want to see this nasty red change. I want to see the EPS obviously going the other way. It is very cheap, but and look what they guided. 2%, 3%. So what they may have done is they could have softballed to make it very easy for them to grow, which again, props to them. But I'm gonna set this one out. If you're in this one, if we are looking at terms of areas of support and resistance, I'm gonna say 315 is our floor. 315 is our floor. We have good support. Actually, that's the next support. Okay. So on the downside, if the stock continues to go down, watch for 535. That's about $1.50 from here. So watch for 535. Um, that's all I can say really. To the upside, goodness gracious. Let's see. We could see a spike to maybe $14. Unlikely. You never know. So yeah, I'm gonna set this one out. Uh, on the low side, 535. The high side, let's just do this. There's good support there, good resistance, I mean. Then right there, yeah. Okay. So I chose those two lines based off of the data over here. You can see it extend to the left. Right here acts as resistance, support, resistance, 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 resistance. So to the high side, if they do have positive earnings, watch for $8.14 and $10.90. On the upside, on the downside, 535 to 455. Take it or leave it. That's all I'm going to say. Long term, I think 2025 might be the year to slowly get into this one. I think that might be the ultimate play for me, my style. Get in 2025, get a starter position, slowly accumulate, get to the owning this stock over 1 year to get long-term capital gains rate. Hold till 2030 for the insane market melt up and cash out. Sounds super easy. You never know. But I'm willing to wait on this one. And again, the EPS, maybe leadership change, etc. Anyway, if you made it this far, please let me know what you think of this video. Have a great day. Good luck if you're in this one. Thanks for watching. Consider subscribing. I really appreciate it. Adios.